Welcome to the Consultancy Edge. I'm your host, Matt Hodkinson, and in today's episode, I speak with Ramon Param and Nathan Simon of Kennedy Intelligence, who provide market intelligence and advisory to the consultancy sector. We discuss the value and use cases for top-level intelligence in consulting, the levers to pull when seeking to maximize the value of your consultancy at a future sale or exit event, and we talked about the growing trend for outcomes-based selling, something that's not only helping consultancies to drive faster growth, but also impacts on those key valuations. It was a fascinating interview that I know you're going to learn a great deal from. So let's get into it. Welcome to the Consultancy Edge, Ramon and Nathan. How are you today?
Matt, doing great. Great to be here.
Excellent. Now, you guys, tell us, before we get into stuff, Nathan, I'll come to you for this one. Tell us a little bit about Kennedy Intelligence and who you produce your insights for, and essentially what your value proposition is there.
Sure, happy to do it. So we are a research agency focused exclusively on the consulting industry. So basically what we do, our day job is to basically look at the consulting industry, understand what's going on, and advise consultancies. So as part of that work, we are looking at the markets. So we spend a lot of time talking to the client side, trying to understand where they're putting their bets, where they're going to direct their spending, what are the gaps, what are their needs, and then looking at the provider side and understanding how the consultancies are sort of lining up against this. That translates into kind of traditional market research, so numbers around the market, how big is the market, where is it growing, and all the various intersections. Also, we do work on competitive landscapes, so understanding who's competing in what spaces, how they're going at it. We have a whole line of research around investments, so understanding who's making bets where and why, and understanding, crucially, kind of what's that journey. So what is the journey of investments that takes a consultancy from sort of point A to point B? And then we do a significant amount of work around sort of the buyer perceptions. So why do they choose who they choose? What is the experience? So in a nutshell, that's what we do.
Wonderful. And I know that when we get into those sorts of insights, that's really what I'm looking to get into today with you guys. I know a lot of our listeners are going to be keen to know things like, what is the size of market that's available to them out there? What are the trends that they need to be aware of and hopping onto? And I know that you guys have been doing this for a while. Ramon, the business has been around for, is it 30 plus years at this point?
Yeah, it's got a long legacy that goes way back. So it goes back to the time of the team producing newsletters and producing some of the initial insights and intelligence into how the consulting sector was shaping 30 years back. So it's gone through a lot of different transitions. It's also, been an independent entity. It was then bought out by Bloomberg, span out again, was independent, and then was purchased by a business called ALM Media. More recently, it's span out and, as Nathan mentioned, continues to stick to what it's known for in the industry, which is producing premium intelligence, research, data, benchmarking on the consulting sector. More recently, I joined up with the Kennedy team and I've sort of extended this offering now beyond just the research and intelligence, but also adding in advisory and also M&A services. What we're finding is a lot of consultancies that are working with Kennedy, they're asking us to say, hey, your research, your data, your benchmarking, it's really helpful for us to understand where we're positioned in this market. The market is clearly changing very rapidly, particularly it is at the moment. We're seeing a whole bunch of different disruptors that are occurring, which are changing how the consulting sector is looking. How do we position our firm and how do we ensure that we're at the forefront of the changes that are occurring in the industry? So that's what the advisory and the M&A offering is looking to bring at Kennedy now.
And I guess the beauty of being around for so long and having proven that value proposition, you've got an enormous amount of historical data to go on. And I guess your own methods for capturing that intelligence must have evolved a great deal over those years.
Absolutely. So we've got a lot of proprietary methods and approaches to gathering data. And Nathan could talk a little bit more about the specifics about how we capture that data. But what I can say is that now we have an exceptional database, well over 1 million data points that we've captured on the industry. So these are industry data points to understand how buyers of consulting firms are consuming consulting. And we're also now capturing a very strong database of M&A data points. So what are deal volumes looking like? How are the different buyers and investors in the consulting industry changing? And also, what are the valuation metrics looking like in the sector? And we find that super important, not only for the M&A side of things, but also for advising niche boutique consulting firms that are on a growth journey. Because what we say to a boutique that comes to us is, okay, well, you're in growth mode. You might be looking to exit your firm in 3 to 5 years' time. What are the different levers, the different factors within your business that you need to be looking at to ensure that you're valuable when you do look to come to exit? And we have a load of data points to help support us in that.
Amazing. And Nathan, just tell us briefly. I mean, we're not looking to get your industry secrets here, kind of aired in a very public scenario. But where are you generally getting that data from? Where do you get your insights?
So we are, we're talking directly to the market. So we spend a lot of our day is talking to the market, and and then we are sort of scanning everything that's sort of available, right? So we're sort of pulling all the sources we can of publicly available data to supplement that. I think the quite kind of distinct thing that that we do that I think very few others do is we really go out and engage substantially with the client side, and really try to understand what they're buying from whom and why. The one thing that's interesting about the consulting industry, all the years that I've been covering it, is nobody can agree on what it actually is. And when we talk to the consultancies, they have a very fixed view of what their market is. And they will say, well, we don't compete with X, right? They'll say this is our space, they're in a different space. What we found is when we engaged with the buyer side, we found that those distinctions are not real on the buyer side, right? So they have a wallet to spend. They're going to spend those resources on the solving the problems that they have, and whether they buy from X or Y, that's the market,
Yeah.
right? So we've done a lot of work on our own data to understand not just the spending in a segment. Let's say that the spending in manufacturing, in the UK, and let's say the spending on supply chain, right? So we can narrow in there. We've still got a big chunk of spending, right? So one of the things we've done with our own research is to understand how those services are being delivered, and to understand, how much of that is, sort of that kind of war room consulting, the classic thing that a lot of people think about. How much of it is sort of classic kind of best practice process improvement? How much is system integration or more sort of bespoke technical work? Where does managed services and products fit in? So we have a method where we're going to split that wallet apart and understand why they're ultimately buying different kinds of delivery.
Yeah. Okay. And I'm keen to just reflecting on that. I mean, one of my observations is a lot of the clients that we work with in the consultancy sector, they think, as you've just stated, that they have a bunch of differentiators, that they are sufficiently differentiated from others in their category. And yet the perception is very different on the buyer's side. And I think it comes from the buyer's perspective, of course, is that they have challenges to solve. And there's a number of ways to achieve that. They're not necessarily solution aware, and they're not looking for any one particular value proposition. And I want to pick up on that because I know that you guys just starting to go into some of the key trends and insights that I know that you've unearthed. You've got some very kind of distinct views on trends around consultant roles and how that forms a foundation for the value proposition in the world of consultancy. I wonder if, perhaps, Ramon, would you mind commenting on that?
Yeah, I can start off with just the high level overview of how I see the consulting, consultant role piece changing and ultimately that feeding into value proposition. And I think Matt's an important point because a lot of consultancies are coming to us and saying, I've read your Kennedy Monitor report, you're telling us about all these, different trends that are occurring in the industry. How does that fit into where my consultancy is positioned in this market? And one of the key trends that's coming out of our data and our research is this convergence and ultimately blurring of the lines of traditional consulting segments. What was a traditional operational consultant or strategy consultant or systems integrator or digital agency, they're all playing now in very similar segments of the market. And that wasn't the case 10, 15 years ago, or even 30 years ago when we were first monitoring the industry. It was a very different landscape. So what does that mean for boutique consulting firms? It ultimately means that they have to be very clear about where they're playing and how they're positioning themselves. And a very common theme that we see across consultancies that come to us and talk to us about market value proposition in light of the work that we're doing on industry trends is to say, hey, actually, you know what? We don't actually know very well where we're playing in the market. We don't have a very clear value proposition that separates us against all the other industry players that are now playing in our same segments. So there's a lot of work that we see them being required to say, look, the market landscape has changed significantly over the last 30 years. How are you differentiating yourselves against the other players that are in the market? And that might not be to say we're just great at one specific niche thing. It might be saying, actually, our roles are very different depending on the project, but we have a very unique value proposition when it comes to outcome, when it comes to the sort of clients that we're working with, or what we're delivering to the market. But ultimately, what we find is that many of these niche consulting players are in growth mode, they're running, and they're not spending the time necessarily to take a step back and think, what are we different for?
Yeah, no, that's good. And of course, you're preaching to the converted here, Ramon. No, that's something we obviously work with on a day-to-day basis, and we've made the same observations. And I wonder how can this level of sort of intelligence and insights, how do you find out, for example, how do you inform those decisions around differentiation and positioning? So I know we've got our own kind of thoughts on this, and we rely heavily on the client's perspective of what they've experienced with their buyers. What were the challenges, the frustrations, what's the situational kind of landscape look like? Where do you advise that the consultants look for that data as well to inform that core value proposition piece?
It's a blend of that, Matt. What you mentioned is digging further into the the specifics of what their clients see them as being special for, and then we add on to that the industry space as well, the industry research and industry intelligence and benchmarking. So we'll then say, look, from all the data that we're gathering on the industry, what are your competitors doing in the market? What are they? How are they looking to differentiate themselves? And that can be from a lot of different angles. It could be from a functional perspective. It could be from a sector vertical perspective. It could be from a regional perspective. And you can think, when we're advising clients, particularly in the US, but also goes very well for Europe, there are specific regions that they might be very well known for. But definitely when you peel back and you start to look through what they've done over the last 5 or 10 years that they've been in business, they're actually sometimes unaware of the very specific capabilities that they've gathered, not only functionally, but also from an industry vertical perspective. And in some cases, also of specific partnerships that they've not been very good about deepening and leveraging further and being better known for in the market.
Just, and Nathan, perhaps you can weigh in on this. We're noticing, of course, many different ways that the market is being disrupted and new ways of working. Let's just say the elephant in the room, AI, is starting to impact on every consultant's way of working. What does the data tell us, if anything, about those emerging technologies, or how can we use intelligence around those emerging trends, emerging threats, emerging opportunities, depending on which way you look at it? How can that inform the way that our value proposition is molded over time? Perhaps we need to pivot in certain ways.
I think I want to maybe take a quick step back and kind of reinforce this point about the role that a consultancy plays. So we went out and we had a lot of asks from consulting firms that would come to us and they'd say, we're doing downstream work. We want to get into the strategy piece, right? We want to set the agenda, or other variations. We want to get into data analytics or whatever. And we spend a lot of time talking to the client side and are thinking about roles that really kind of emerge very organically through these conversations. And what we found was that, there's different buyers within the client organization, different needs. And we basically distilled out 5+1 roles the consultancies play. There's strategy alignment. That's essentially a senior management, getting everybody to say, yeah, we want to go do that. There's domain expertise, which means something about a function in an industry, potentially in a region, where you're known for having done, not 30 of these projects, but 300 or 3,000 of these things in this process. Thirdly, there is a system integration kind of technology platform role. So we know SAP, we know Salesforce, whatever it is. Closely attached to that is a project management role, which is not the sort of staff augmentation piece, the sort of lower level, but more sort of that kind of high level, almost sort of VP level person who can come in and kind of run the project portfolio. So that's the fourth one. And the fifth one is sort of the newest role. And I should have mentioned these 5 we've kind of seen emerge over the course of the industry's history. So the industry sort of kept sidestepping into these new roles. The fifth one is essentially an engineering, and that can be a data engineering role, or it can be a physical engineering role. But it's a very technical role tied to that sort of engineering, data science, or like I said, or sort of physical engineering, and where that intersects with a business process. One thing that we saw come up in the context of ESG was we need to change packaging materials. So that brought in sort of material science capability. So those are the kind of 5 core roles. And I said there's a +1. So the +1 is change management. So the funny thing about change management is when we talk to clients, we ask them, what are your top priorities? And then we say, what's the gap, right? What's holding you back at the end of the day? Is it that strategy alignment, the domain expertise? We kind of run through the list. And at the end of the day, the thing that was always the biggest problem is change management. But interestingly, it's the thing they also spend the least amount of consulting money on. Right? So there's this funny catch-22 with change management that they struggle to buy it, both for internal reasons, because there's often not a single owner on the client side, but also they're almost universally will say, we don't think there's a consultancy that has a solution to this problem. So nothing to buy and often nobody to buy it. So, but in sum, we've got 6 roles there we've identified. What we found, getting back to your point, is that you can differentiate all you want in your role. But if you want to change roles, you've got to do something completely different. Because otherwise you basically have to go and convince every single sale, you have to reconvince somebody that you can do strategy alignment, if that's not how the market sees you, right? And so to come now full circle to your question about technology, things like AI and adding this into your offering. So there's the kind of, we see technology emerging both as a kind of back end efficiency play, right? And this is where a lot of the folks who are creating internal chat GPT type instances, a lot of that is about back end work. And then we see technology embedded in so-called solutions, right? And I think the key point here, and sorry for the long intro, but the key point is that the technology you're adopting, it's got to do one of 2 things. It's either got to reinforce your role, right? So if I'm known for domain expertise, right? I know supply chain and automotive, then I'm going to, the key is that the technology reinforces that domain. There is an opportunity to also use technology to change role, but we find that's a much more complex play, and the technology itself won't change the role, right? So if you're a strategy alignment firm and you make some investments in technical solutions, you can do that. The market won't. Again, you'll have to resell it every time because you're going to have to overcome that brand perception. But there are ways to to use technology as a way to make that pivot. But we find that it tends to be like really a whole firm pivot. So it's not just the technology tools, it's the management structure, it's the kinds of resources you're bringing on board, and it's even the branding, right? And we find a lot of firms will ultimately have to kind of create a side brand uh, to do these kinds of services. I'll
Yeah.
pause there.
Because that's essentially what we're talking about, isn't it? The brand is what people understand you to be and you to do, and understand your role both as an individual and as an organization. And you're absolutely right. I 100% agree. Changing people's perceptions around what you are known for can be an incredibly laborious process, and it goes against the grain. And it really can, I think, offer greater opportunities to play it as a black box play. That the technology is informing that sort of back office activity and really bringing efficiencies to how you're operating within your existing role, rather than trying to change hearts and minds, right?
But there's a double-edged sword, right? Because you got to be real careful, depending on what your role is, that you don't allow the technology to somehow undercut that brand, right?
Yeah, yeah,
So
absolutely.
if you're known for, you know, sort of that strategy alignment role, that sort of top of the house, smartest guys in the room kind of role, um, and you're talking about how amazing it is that you've cut, you know, a ton of people out of your back your back operation, you have to start to be careful about what you're known for or what you're telling the market you want to be known for.
I know that you guys are known in the M&A space. I know a lot of our listeners, consultancy leaders out there, will be looking for some sort of future exit event, whether it's a merger, acquisition, something else, and yet more, or even just building their consultancy around this idea of building to sell, that they're building something of inherent value. Ramon, tell us about the work that you do in the M&A space first of all, before we look into perhaps some of those trends that you've identified in that area.
Yeah, absolutely. So we work from an M&A perspective in the consulting sector from two different angles. We work with sellers of consultancies, and we also work with buyers of consulting firms. Firstly, with regard to how we're working with founder owners, how we're working with leaders of consultancies that are looking to sell their business, we often work with them 12, 18 months before they look to press the button on going to market. And we think that's super important because ultimately there are many things to be thinking about before you press the button on going to market. That ultimately, if you decide, hey, actually, I want to sell my firm in the next few months, you don't have the time and the bandwidth then to actually implement those changes that can have a huge impact on the value that you're going to deliver when you do sell your business. So, thinking 12 to 18 months beforehand, working with an advisor to look through all the different areas of value accretion across your business and address specific pain points, super important, we find, to get done 12, 18 months or even longer before you look to go to market. So we work with founder owners and we work with leaders of consulting firms on that advisory piece to assess their business before they're going to market, and then to implement changes in their business so that when they do press the button on a sale process, they're going to look to optimize the valuation and the deal structure that they're able to achieve. So that's the first bit of what we do, alongside them pressing the button and actually going to market and delivering a sale process where we're looking to bring in an international and a very broad set of buyers into a process to consider whether they're the right fit for our client that's looking to sell their consultancy.
And
on the other side, yeah.
So, sorry, Ramon, to cut across you. What I was going to ask though, generally, what is the state of the M&A market in consultancy at the moment? Because I know that there's a whole bunch of guys out there who have had a really torrid sort of 18 to 24 months in terms of taking on new clients and really keeping the business at a high rate of efficiency. Others that we've seen are doubling in size year on year and growing at pace, and almost having to turn away work. What's the general sense about the opportunity at the moment?
Yeah. Opportunity now is currently strong, and I'll give a bit of context to that. So, as part of our Kennedy Monitor report, we have a section specifically where we deep dive into investment trends and M&A trends in the consulting sector. And this goes way back. We've collected data that goes back to 30 plus years. But we look deep dive into trends over the last 10 years. And the interesting real time and where we've seen M&A activity change substantially has been after COVID. So, after COVID, we initially saw a dip when there was uncertainty, and then a rapid increase in the amount of deal activity that was occurring in professional services. A bunch of reasons for that. We had an abundance of capital that was available to do deals. We had low interest rates. But more importantly, from an industry perspective, the sector changed substantially over COVID. And a lot of the big buyers that we were seeing, undertaking many acquisitions and investments in the market, realized that they had gaps in their capabilities and they had to change their value proposition over COVID to meet new client needs and new industry needs. So there was a huge amount of deal activity that we saw going on in 2020 and 2021. And also, I'd say at the beginning of 2022. What we saw last year was a bit of a reversal in that. Interest rates were rising, there was uncertainty in the market. Buyers that were previously active were pulling away from deals. And a lot of founder owners that we saw that were wanting to sell their business, they weren't able to hold up their forecasts and their budgets against a changing market that was deteriorating quite quickly last year. That being said, at the beginning of this year, we've seen an uptick in activity. So we've seen buyers get back out there, look to do deals. We've seen founder owners of consultancies find an improvement in their performance, which has ultimately enabled them to have successful outcomes where they've looked to sell their business. And overall, the data that we've observed for 2024 is robust. The first half of the year looked positive in most segments of the consulting market. And that's carried on to the second half. And we've seen that through landmark deals, particularly in the private equity space, private equity investors moving into the market. So ThoughtWorks, Perficient, a lot of the accounting networks like Grant Thornton and Baker Tilly, notable transactions that have occurred in the market that have grabbed headlines. But underneath those sort of headline grabbers, the boutique firms that are much smaller, there's a huge amount of deal activity that's occurring there this year.
Right. And Nathan, I know that you've been keeping your finger on the pulse, should I say, of the M&A space and the things that are driving value as well. So if there are a few listeners out there thinking, I'm looking for that future exit, I want to maximize the valuation for my consultancy. What are the sort of levers that you consider to be most important based on what you've seen and learned?
A couple of things come to mind. One thing we've seen overall in the markets, I described that sort of taxonomy of roles, and we've seen a shift overall where buyers have saying more and more the gaps that are holding them back are technical gaps. So all the firms in the market are looking for technical talent. So that and they're looking for both the talent and the IP that comes with that. So one of the things that ultimately drives valuation right now is the ability to bring that to the table. I think another thing that we've observed is, and this is more than just making yourself attractive to buyers, but this is just a trend related to what firms are doing to improve their businesses, and it, oh, by the way, makes them more attractive to buyers. And that is really this sort of shift towards more outcome-based commercial arrangements. So, everybody talks about kind of value-based selling, but in our research, we've observed that it was up until relatively recently, most consulting was either time and materials or fixed price engagements. But we've seen a market shift, and it's being driven by both kind of innovative consultancies, and it's being driven by buyers who like this structure. And what we see is firms pushing towards, basically putting fees at stake based on outcomes, and all the work that goes with that to run that kind of system. So measuring outcomes, being able to show as part of a pitch what the range of outcomes is going to be, then being able to do the tracking, and then being able to actually sort of run the commercial arrangement around that. we found this is both a pretty powerful way, getting back to our conversation earlier, how does one differentiate? So, I think what we've seen kind of that hierarchy of needs is, first of all, you got to know what your role is. You got to figure out how to differentiate in that role. And then what we've observed is that the ability to do outcome based consulting and price that way is a key differentiator. And so that's quite attractive both for your clients in order to build your business, but it's also quite attractive to buyers, to investors, so private equity or other investors. They tend to look at that especially when there's a bit of a track record to it. That kind of a structure has been quite attractive.
Yeah, it's the ultimate confidence, isn't it, to deliver impact from the work that you're doing and to make that part of the commercial arrangement. I know that I don't know whether you've got any observations on this, but we've noticed that there is often a bit of resistance around the bureaucracy that goes with that sort of performance-based deal, as we may call it. And I wonder actually that some buyers shy away from that because they're having to lift the lid on the numbers. They've got to put a lot of measurement and sharing in place of the key numbers around those arrangements. But are you finding that more and more buyers are open to that because the upside potential is huge, and actually ultimately they're buying into somebody who's buying into themselves?
Yeah, it can go either way, I will say. So what we've observed is an outcome based fee arrangement and project kind of delivery is it can be the ultimate partnership, right? It can be that unlock that creates that true partnership that has always been hard to get to when you always sort of had my side of the table and your side of the table kind of thing, and we kind of keep it to ourselves. But at the same time, it can also be the ultimate kind of partnership killer. So like everything, it all comes down to how you actually do it. The thing itself doesn't solve the problem. It's how you actually do it. And so what we've observed is that some firms, especially I will say here that the larger firms that will try to get into outcome-based billing and delivery, they have a risk of so they have enough resources that they can always get an outcome if they throw enough of their own resources at it. In the process, they have the ability to basically run over the client. So that's the scenario we've observed that can break down the partnership, because they're ultimately often creating what are unsustainable outcomes by the client. And in the process, there also can be extremely demanding about what you mentioned, the transparency on numbers and access to data and access to client resources. So it all comes down to how you run it, right? And the firms that we've seen do it best are the ones that really get that full transparency up front about what this is going to take, what it's going to take from you, and what it's going to take from me, and how we're going to make it work together. When it works, it's golden.
Yeah, it's the ultimate, isn't it? Let's face it. Ramon, we talked about obviously the M&A space. We talked about the money, and I want to talk specifically about private equity because I know that you've identified some trends in this area as well. Historically, consultancies may have been looking for PE money to help them to scale the business, but you've noticed a difference in direction with this now.
Yeah, absolutely. It was an interesting trend that we did observe when we looked at, deal activity over the last few years. So, way back, 20, 30 years ago, private equity just weren't a player in the consulting sector. And, they weren't confident about doing investments in the space where they knew that the assets of a business ultimately are walking out of a door every evening. There was a lot of risk that they saw about making an investment in the consulting market. And also the ability to leverage that consulting investment was a lot more difficult compared to asset intensive segments of other markets. So, we saw private equity shying away from making investments in professional services historically, and that's changed substantially over the last 5 years. And what we saw last year, surprisingly, was despite interest rates rising, private equity were incredibly active in the market. And, I talked about, referenced high profile deals like EQT's investment in Proficient, more recently Apax investing in ThoughtWorks, but a load of other smaller consultancies, boutique consultancies that get invested in by mid-market and smaller private equities. And that was substantial last year, despite interest rates rising. We saw that actually the proportion of deals that occurred from private equity or private equity-backed businesses was one of the highest it's been over the last 10 years. And again, that's despite interest rates being high and rising, and a lot of the uncertainty that we saw in the market last year. We're probably putting that down to a number of different factors. One, there's abundance of capital amongst private equity, this dry powder that they're looking to put to work. In professional services and consulting specifically, we feel that they've got this model right of making investments in the consulting market and attributing returns to those investments. And that's through a number of different angles. It goes to some of the topics that Nathan talked about with regard to AI and operational improvements. Private equity have really got that right to enable operational improvements, not only technology enabled, but also non-digital enabled operational improvements in consultancies to improve margins and profitability. And also, I'd say strategically, they've got very clever about understanding how to build up consulting firms and enter into adjacent segments of the market as this industry is changing rapidly. So we see that being done, very well, either organically, hiring in and investing in new segments of the market, but also via bolt-on acquisitions. So they'll make this platform investment and very smartly make bolt-on acquisitions in adjacent segments of the industry and attribute value that way.
Excellent. Nathan, I mean, just building on this idea that PE money is going towards transformation, I guess, rather than traditional scaling sort of options and directions. For those that have resisted this, that are resisting change, perhaps, that have their head in the sand to the whole digital transformation, albeit it doesn't have to be digital, as we've learned. What would you say to them? What is the main sort of driver? Is this evidence, for example, because PE are famous for not just throwing money at people willy-nilly? Is this some real credible, tangible evidence for to extol the virtues of transformation?
I think kind of the proof is in the pudding. I mean, we have a track record of PE investment, and we can see, we can measure the success of those entities. And I think this is absolutely a way to, really step change the growth. Yeah. And we see that coming in really two different versions, right? One version is sort of the traditional scaling model, which hasn't gone away. It's still there, but it's not. We also see some more transformative deals as well. But that scaling role, right? So that could be either we're going to separate off an entity and we're going to focus it, and this goes back again to roles. So they're often focusing in a particular role. So a classic case of that was like Booz Allen, right? Separated off, focused it on the public sector in the U.S., made the investments that needed to be made, and then rolled the company out to the public markets. We see it in a scaling way that goes the other way, which is to be extending the business. So we've seen, for example, in Europe with supply chain consultancies like FSO and Argon. So taking these bolt-on acquisitions like Ramon was mentioning and just expanding into new geographies, right? Same role, right? Those two examples I threw out, supply chain consultancies, typically known for their domain expertise, but we can take them into new geographies, and we can do it a heck of a lot quicker through acquisition than we can through organic growth. Real tough, especially at that level, that domain expertise level. That's a tough space to organically grow into a different geographic market. So I think that's a tried and true method is to get that investment capital, make those deals. What we've seen more recently is private equity money that's really facilitating a transformation of the business. So we're getting back to that idea of, can we change the role? And I think what we see, especially in the audit space here in the U.S., a number of deals targeted at really changing the role of those businesses, making them much more sort of technical oriented solution type providers, with all the management changes that are going to be required to run that kind of business. So these are traditionally very disaggregated companies. So I think we're going to see significant sort of centralization of management, and the investment capital that a sort of partnership would struggle to put to work right? So bringing in that capital to make those deals, make those changes. The other thing we've seen is deals that are taking a consultancy and adding it to another professional services entity. So we saw this initially in the healthcare space with the creation of firms like IQVIA. So basically stitching together consulting with non-consulting professional services to create a kind of an integrated offering. More recently, we're seeing that play out in the engineering space. So Jacobs investment in PA consulting. So this is a play on Jacobs here saying, can we change our role?
Mhm.
It is the way to do that to bring in a PA consulting. And we saw a recent deal this year of PE-backed entity, Belcan out of the US being sold into Cognizant. So again, taking that PE-backed entity and the PE provider is the one who's able to push it into a strategic buyer where they can really make those kind of transformative changes in the business model.
Yeah, it's
But I
incredible.
think, just to reiterate, I think kind of the proof is in the pudding. These have emerged as pretty high growth entities.
Yeah, excellent. No, I love that idea. And talking, I mean, growth is at the heart of everybody's awareness, of course. And as stated earlier, we've seen two camps in the consultancy space the last 2 years or so. Those that are thriving, those that are really looking to boost their business development and sales engine side of things. And I know that you got some thoughts on how consultancies should be developing that BD and sales engine. I guess from your experience, not just with the M&A space, but of course those investors are going to be looking for a sound onboarding of new clients that's as consistent and regular as possible. So what are some of the sort of perhaps the value proposition tactics, BD sales engine observations that you've made? I'll leave that open to either of you. Who's going to answer that one?
I can start with some observations there, Matt. So, it's a really interesting point because we are working with a couple of clients actually at the moment on that specific issue, and it feeds very much directly into, M&A and particularly the type of buyer that you're looking to ultimately transact with. Private equity particularly, but I'd say a lot of strategics as well are looking for that business development engine within your consulting firm. Too often you find, particularly smaller growing consulting firms, it's all on the shoulders of the founder or on a couple of individuals that are bringing in business, or it might be just dependent upon some specific existing relationships that they have, and they use those relationships to expand out into new pieces of work. Ultimately, a transaction and about delivering sustainable value in a consultancy, from what we see at Kennedy, is about creating a platform that's independent of the founder and a couple of key people. It's ultimately a platform for growth, and a platform for business development enables that. So one of the specifics initiatives that we're looking at currently with a client is around developing a partner track program to say, how do we create a partnership within the business which incentivizes the next tier of leadership within a consulting firm to grow within the organization and ultimately have that opportunity of becoming a partner within that consulting firm. And a key metric that we're going to be looking at to incentivize them to potentially become a partner in the organization is around business development. So all the different next tier of leadership team have business development goals that they have to live up to. They will get incentivized and rewarded for that. But the additional carrot that they can achieve is ultimately becoming a partner in the firm if they achieve these different business development goals over a period of time. So we're looking at that as a very effective program to drive business development and create a culture of business development across an organization.
Yeah, I think that's got to be the way to go, hasn't it? And I think my observation in the world of consultancy is that there is still that roller coaster peaks and troughs dynamic when it comes to business development, not just from the results, but the effort as well. Not the KPIs, but the KPAs, the key performance actions, a lot of the time just aren't being done consistently enough, because often consultancy leaders are still wearing too many hats, still being driven in several different directions. That's been absolutely fascinating. Nathan, anything to add to that before we move on?
Just to reiterate the point around selling outcomes, I think we're often surprised by how little tracking consultancies do of the actual outcomes that they deliver, besides we did X kind of project in X sector. Um, there's a real discipline around that, and it takes effort, and it typically takes sort of management ownership to sort of drive that. But if the if there's discipline there, and that kind of data is tracked, that is extremely powerful selling tool.
Yeah. Yeah, and it can open up that value-based sale, as and that structure that you've determined, that performance-based arrangement. I think it is so powerful and should make the sale a lot easier. It is, let's face it, achieving better alignment with the buyer's needs and expectations, and really backing yourself. We've made the same observations here at TGO. That impact needs to be measured first and foremost, and it can be processified, made consistent. It's a great thing to achieve. Gents, if you won't have listened to the Consultancy Edge before. We're in our early stages, but there is a regular feature that we speak about, and that is Snog, Marry, Avoid. It's not the traditional format. You'll be very, very glad to hear. But first off, I want to hear what your Snog would be. This is a quick win in the world of consultancy. If you're looking to implement something almost overnight that's going to make a step change in your fortunes, what would it be? Ramon?
Yeah, I'd say it goes to the incentives around BD. Just even a very simple business development incentive program. That's the quick Snog for me.
Wonderful. The marry is something that obviously you would love to have in your business long term, something you absolutely couldn't live without. Nathan, what would that be for you?
I'm going to sound like a broken record, but I think the outcome-based selling is the key.
Amazing. I'd be interested to see, and hear from listeners, in fact, who think that performance-based arrangement would work for them, and whether they're going to drive forward and implement that if they're not doing it already. And the avoid, what is something that you would advise people in the world of consultancy that they ditch immediately? Ramon, what would that be for you?
So I'd say it's anything that doesn't take into account culture, right? So I think any initiative that you undertake, avoid not having culture and people at the center of it. Ultimately, we're people-based businesses. Your value is the people, your value is the culture, and that's what keeps everyone together. So, avoiding not having a people-focused, culture-focused initiative as part of any of the work that you're undertaking is what I'd say.
Fantastic. I think you've really opened my eyes today, gents. I think that there are many consultancies out there who need to put more of an emphasis on sourcing amazing intelligence, data, trends that they can hop on, even if it's as simple as the size of market stuff, the opportunity, and keeping that finger on the pulse. Nathan, where can listeners find out more about Kennedy Intelligence?
So they can check us out on our website, Kennedy Intelligence, and they can also we've got a pretty active LinkedIn presence, so look for us there.
And you've got your own podcast, haven't you, as well, Ramon?
We do, the Kennedy Monitor, so you can find that on our website. So yeah, please take a listen, and hopefully Matt will have you on for a session soon.
Wonderful. Jen, it's been a pleasure having you today. Thanks so much for sharing your journey.
Thank you, Matt. It was great. We enjoyed it. Thank you.